Hello and welcome to Kramer's Corner with a special technical update on semiconductor and semiconductor related shares. I will guide you through these most traded semiconductor shares, and we will start with Nvidia, and we will have a look at the short to medium term. What we will see is also like a training video, educational video, so there's no recommendation whatsoever in this, but there are some interesting technical patterns developing or that has developed during the past few weeks. We start with Nvidia, that is unquestionably the biggest semiconductor company that we have. Nvidia formed a bearish engulfing pattern a few weeks ago, actually mid-June, and another one again here in mid-July or early July. What it is, market started up here, meaning that buyers started up here trying to push it higher, but sellers took control and engulfed, actually throughout the previous day's trading. That is a fairly strong top and reversal pattern. And then it repeated again when it tried to bounce back. Another one that actually took out 3 days of bullish trading or positive trading. Key support was around 118, 115 at spot 80. There's some support you can see it tested a couple of times, and yesterday they actually closed below. So that's quite a bearish signal. We are now in a bearish trend with a lower high. This high is lower than this one, and new lower low, which is lower than this one. So we are in a bearish trend. What we just need, however, is that we like to, if you are not long in Nvidia, you want the RSI to close below 40. If it closes below 40 threshold, then we are also in a bearish or negative sentiment, confirming the bearish picture. So that will be interesting here the next couple of days. If it bounces off, then we can possibly see that the Nvidia stock is trying to move back above 118, but it really needs to close this gap, because these gaps here are also quite interesting. We had a gap here that didn't close and a gap here. Buyers need to close this gap, or Nvidia needs to close this gap for upside potential. But for now, we are in a bearish trend. Looking at the weekly chart, we can see here also a bearish engulfing here last week that took out the previous 3 weeks of positive or bullish trading. There's been showing divergence on the RSI for quite some time. RSI divergence is when the relative strength index has performed lower values, whereas the market has moved higher. So and we are talking about close price. So we do have a divergence here. Also, we can see that the overall traded volume has been declining, which is like fewer and fewer people are pushing a ball up the hill, and eventually they have to let go. And this seems to be the case here. For all this to really reverse, first of all, a close back above 118 is needed. Then it needs to close these gaps here, meaning we need to close above 126.36, but then we still have this top reversal pattern in place, so we actually also need to close above 136.15. So that will be the key levels to look out for the next couple of weeks. ARM holdings, more or less the same picture. We have a bearish engulfing here that took out almost 4 days of bullish trading. Gapped lower, didn't close this gap, and if it does close below 149.90, well, then we are in a confirmed downtrend. RSI is still in a positive sentiment, but as you can see, also a divergence here or imbalance in what the strength hasn't really supported the last leg up there. So this is what you should look out for. We really need a close above at least 173.25 for the uptrend to resume, but we still have this pattern in place. So it looks so be careful with if you're going long here or buying, and also keep your stops tight. If we close below 149.90, well, then there's room down to around 135, 125. You can see here on the weekly chart, we have what we call a doji evening top and reversal pattern. This is the doji where 2 weeks ago, market opened and closed more or less at the same price after having a bullish week and now a bearish week. very strong top and reversal pattern. You can also see that the RSI on the weekly declining, and volume is also declining. So it is not a strong signal, to say the least. Super microcomputer breaking below the slightly rising trend line here, very close to be testing support at 698. We have some strong support area here, 698, 663. You can see it going back to previous times where market has turned around or accelerated from. If it does close below, well, there's some support at the 200 moving average coming up, adding to the support here. And well, if we close below 660, well, then we're looking around 500, 496. To really reverse this picture, it really needs to get back above the rising trend line, but that will only pause it a little bit, I believe. We really need to get back above a 963.30 to establish a bullish trend. Here you can also see the market, if it takes out these lows here, well, then we have a confirmed bearish trend on the weekly. Advanced micro devices, AMD, also in a sell-off. Gap lower here, as you can see, that's a strong signal. We now below 150 spot 40 support. There's little support around here, 141, around that level, but it's not that strong. We actually have to go all the way down to 133.74 level to look for support. What is also interesting is that it adds to the bearish picture is we are now in a negative sentiment on the RSI. You can see we are below the 60. The 40 on the RSI. Also AMD, quite a few, actually all the way back in March, it actually formed a doji evening star, and the star is because it's the body here of the candle. This is the body, and these are the shadows or the wicks. Formed a top and reversal pattern, and last week we had a massive bearish engulfing candle there also. So it looks quite heavy for AMD also. The ADI or analog devices testing a key support here at 224.75 and this gap area. If it does close the gap area, meaning if it closes below 217.48, then it has closed this gap area, and that is very bearish for the stock. As we can see here also, divergence or imbalance. You can see the strength indicator was declining, market moved higher. So if it takes out this gap here, and I think it will try to do so here, and I can tell you it is currently trading about $5 lower. It's trading at 219 here pre-market, so it's trying to close it. Let's see if it will actually close it. And weekly chart, we have a top candle here, was cancelled, so a little bit more indecisive, but we could establish a downtrend. Applied material, or AMAT as I prefer to call it, bearish engulfing here, taking out 1, 2, 3, almost 4 or 5 days of bullish trading, and then sellers really took control and gap lower here. And now we're also below the 209 as key support, and we could see it pushing lower. We have RSI below 40 threshold, no divergence, indicating we are likely to push lower on applied material. It is indicating a little bit higher, around 209 here at the open, but let's see later today. Support at 196.60, around that level, and I will also say that, well, there's a little bit of support here at the lows around 186.60, around that level, and where we also have the 200 moving average coming up. Looking at the weekly chart here, also we can see a bearish engulfing taking 1, 2, 3, 4, 5, several weeks out. Last week, very bearish indicator indeed. Of course, it's not about that everything will just collapse now. It's also you will see up days and you will see down days. Broadcom, also a big player. It has this massive gap here from back in early June or mid-June. But now you see here we have a bearish engulfing also. Close this gap here. If it does close below 146.10, it has closed this gap here, and that means everyone that is the Broadcom up here is out of the money, and they are feeling the heat. I'm sorry to say. To demolish this picture, and this is what you can do: draw these horizontal lines. We really need to close above 169.38 and close this gap here. So that next couple of days could be interesting. Also, if RSI is closing below 40, that would be key for bearish or bullish over the next couple of days. But the picture is fairly clear also for Broadcom. Moving on to Micron Technology. Massive bearish engulfing here back in mid-June, taking out 2 days of training, and gaps also. Gaps are quite interesting. Try to get back up here, failed, gap lower again, and gap lower again here a couple of weeks ago, and now a massive sell-off, and we are looking at RSI also showing negative sentiment. We are below 40, pointing lower, and the support at 107. It will probably try to close the gap down to 99, it's about 69. If it does, well, then we are seeing lower levels. However, I think it will test this support, and then it probably will bounce a bit, and then it will have another go. To demolish this picture, first of all, it needs to close this gap here, and that means that it needs to close at least above 127.49 to resume to an uptrend, or at least demolish this bearish picture. So it's quite bearish indeed. Looking at the weekly, it's not that clear cut, but we do have imbalance on the RSI. You see RSI was declining. The values, that's the strength indicator, was declining, whereas the market moved higher and shot higher, almost like in a shooting star-like pattern. It's not a real one, but still shot higher and then collapsed. And again, if it takes out, and let's draw a horizontal line, if it takes out 105.70, well, then the sell-off could be accelerated. Qualcomm or QCOM here, top of reversal pattern, doji evening star pattern. You can see in the circle we have bullish candle, we have this shooting star like candle, and then we have a bearish candle, and that is a top and reversal pattern. Try to get back up there, failed twice, and now it's moving lower, and currently is indicated to open around 180. Then we have a gap level down here, and again you can see how much important these gaps are. 170.47 and 169.27. If it does close below here, well, then there's further downside. I think we will push to test the upper part of the gap, and then we will have a little bit of a rebound, but we really need to get back above 200 to neutralize this sell-off, but it needs to get above 211 to establish a new uptrend. Also here on the weekly, you can see, well, it doesn't look too good. We have the shooting star-like pattern, and we are in a downtrend, lower low, lower high, lower low. The RSI is still in a positive sentiment, but it is a slow reacting one, so keep an eye on the daily chart. Taiwan Semiconductor, or TSM, also bearish engulfing. You can see how these bearish engulfings are just across the board on all semiconductors. Took out the support here at 167, gap lower, testing the 160 support, and at the moment we are trading 157.60 pre-market, meaning we are actually below here, so we could see a sell-off down to around 150, 147.80 support area. If it takes out that, well, then we are looking at lower levels, and as you can see, the RSI below 40, meaning we are in a bearish or negative sentiment, indicating lower levels. Weekly chart also formed this massive bearish engulfing 1, 2, 3, 4 weeks, 5 weeks of bullish trading taking out. Still a positive RSI, of course, because we haven't been trading for that long, but you can see the amount of traded volume going through on the sell-off. It means that there are a lot of sellers out there, not so many buyers. Moving on to Intel, that actually was a little bit of a success story shortly, at least after breaking this range, or this first of all this triangle and this range trading, gapped higher, shot higher, almost up to the resistance at 37.75, but then failed, massive sell-off, and now we are back below this 32 and a quarter, and I think we could see it drop lower towards the $30 level, 30 to 29 ish level again. Moving on to some of the European semiconductor related companies, we have ASML, Dutch company, that this rising wedge-like pattern here. You can see this is a wedge where both the trend lines are rising, but they're moving towards each other. It broke out with a massive gap out, when was that, 17th July, I think it was, after the earnings. That disappointed a lot. Took out support here just straight down to this support at 864.5. I thought it would bounce a little bit, and it did, but not much, and then sold off again, trying to get back up, and now it is trading as we speak just around the 804 support, and tested the 200 moving average. We are in a negative sentiment, indicating likely lower levels, but I think we will try to maybe take a little bit higher here the next couple of days. However, if we do close below 800 level, expect a push down to around 760. You can see this gap down here, called a continuation gap. Well, then that could come under pressure. Looking at the weekly chart, also a beautiful, not a beautiful, I would say, but a doji evening light candle. We had a short bullish candle. We had several weeks of bullish trading, and then a massive sell-off here last week. It came after RSI diversion, indicating trend exhaustion, and this massive, well, it basically takes out several weeks of bullish trading. So that's unfortunately is hurting quite a bit. BE Semiconductor Industries, a stock I haven't looked at that much, but you can see it was like an island reversal-like pattern here, where they are almost standing alone. And if we are adding a horizontal line, you can see it just tried to get back up there, just selling off and gapped lower again, and now we are trading around levels not seen since April, May, actually dipping below. So it doesn't look too good for BE Semiconductors either. I mean, it really needs to close this massive gap here, meaning we have to at least move back above 140.65 to just neutralize this sell-off. And also on the weekly chart, you can see top and reversal pattern, massive bearish engulfing here. You can see it engulfs or eats basically the previous weeks of trading, bullish trading, and here you have the same. You have a bullish candle, you have an indecision, and that's doji, and then you have a bearish candle taking out several weeks of bullish trading. So it really is now also about to go into a bearish mode, and if it closes below 40 on the weekly threshold, that will confirm it. Infinion Technologies, gapping lower today, really bad or heavy sell-off. We have some support. You can see below the support here. We have some support just around the levels, just around $30. Sorry, 30 euros. It's a German company, so you can see it's really heavy at the moment, and there is risk down to, on the medium term, there is risk lower to around 27 and a half. Looking at the weekly chart, you can see what's actually going on. It has formed this triangle-like pattern, and currently it is breaking below the lower rising trend line. And if it also takes out the lows here from back in July, well, then it could fall even further into the aforementioned levels around 27 and maybe even lower. So it looks quite heavy, and it really needs to close this gap for any meaningful uptrend. And finally, Electronics or STM, also massive sell-off this morning that got the lower, as you can see, and it's continued throughout the day, and we really have to go really far back to find levels this low. So we are actually back in 2022 area, just around the 30 euro levels, and that seems like that's where we are going. And also the weekly chart, you can see how heavy it is. Negative sentiment, sell-off accelerated, and you can see also sell-off. The traded volume it has been rising the past couple of weeks. So we are in a bearish trend also on those two. We can just very quickly. No, I think we'll stop here. I already talked for 20 minutes. I hope you enjoyed it. I hope that you are still still enjoy these shows here. So I'll just wish you a nice day and a nice weekend when you get to them. Thank you very much.